Hello and welcome to our webinar today on growing private investment in sustainable farming. Uh, Thanks very much for joining us and look forward to an interesting exchange over the next hour and a half or so. I'm going to just give a few words of introduction, then introduce the speakers, and then we'll get started. This whole topic of private finance has become an important one for a number of reasons. And we're going to talk today about private finance in quite a big picture sense, and particularly as it involves increasing sustainability in the farmed environment, whether it's in farming itself and farming production, but also in terms of the land that we find on farms and the way in which that can deliver benefits, whether it's for the water environment, for climate mitigation, adaptation, for nature restoration, for soil management. There's a great range of ways in which we are trying to build a more sustainable farmscape in the largest sense of the word. Today we're going to think about the UK, which is in many ways seen as a leader in terms of the number of ideas, the number of initiatives, the level of belief, and perhaps you could say, in channeling private finance into to the farm community, into the farm landscape. But we're also going to see this in a bit of a European setting as well. And one of our speakers is going to be reporting from the wider European landscape. And this reflects a little bit IEP, which, as many of you will know, is a sustainability think tank. It's our 50th anniversary year, so it's quite a big moment for us. And we have our largest office is in Brussels with a strong pan-European outlook, but we also have an office and an organization inside the UK, thinking about the UK and all four nations within it. And we have people from both parts of the Institute here today. And we've been working on farm policy since the 1980s, on and off, particularly at the European level. And when we think about private finance today, one reason for this is not only the level of need to build sustainability, but it's also the sense of uncertainty about how much that will be funded through the public sector. And I, amongst other things, have spent quite a few years working on the public goods challenge and getting that as a core element in agriculture policy. But few of us think there's going to be enough funding either in the UK or in the EU for the public goods that we need. So there is pressure to find different ways of bringing in private funding. And we're very lucky today to have a selection of speakers bringing quite different perspectives, from the more conceptual down to the very much farm gate, which is definitely what one needs in a topic like this. I'm going to now, but just a word about the program. We're going to start with Holly, and then and she's going to introduce a report which is published today, in fact, and she's going to tell us about. Then we're going to move on to Isabella, who's also authored a report which is on the IEP Brussels website. And then we're moving on to Martin Lines, who's going to react and give his own reactions. And then finally, we to Jayne Wilkinson from the National Parks community. And let me just say something about each of them first. I mean, Holly is a senior fellow, senior policy analyst at IEP in agriculture and land use sector, with a background in agriculture previously having worked in the Land Workers Alliance. She's based in Wales and she thinks very much about the four countries, not just about England. And also, she has a very practical stake in Wales, having um, just started off with her partner organic vegetable production business. So she's not just a theoretician, but very much a more practical person too. Um, then we have Isabella Wedl, who's a senior associate at IEEP, um, and she's been working on food system transformation for the last 4 years or so, working with quite a lot of international organizations, including the UN and the Forum for New Economy, with a consultancy Systemic. And she has a nice big picture background here, having a PhD in sustainability politics and a master's in cultural and business studies. So there's a bit of private finance in there, not just sort of agriculture. So that's an interesting perspective to news bring. Then we have Martin, who's well known in the UK as the leader of the Nature Friendly Farming Network, but also himself a farmer in South Cambridgeshire, with a lot of interest in in the specifics of agricultural sustainability, including soil health, pest management, rotations, and ways of actually making farming friendly to the future as well as to nature. And he's a convener of networks and sharing work in practice, so a well-known communicator as well as actual practitioner. And then last but not least, we have Jayne Wilkinson, who's the manager of the Nature-Based Solutions Project and the National Parks Partnerships. And she'll explain what the National Parks Partnerships do, I think, and how they work. But they are very much looking at ways of bringing in private finance into the national park community, and doing that serves the overarching of which is broad in scope and able to kind of focus on the very specific circumstances of individual parks as well as a kind of collective challenge. And I think she's going to give us a couple of examples. So we'll hear from all of them, and then we'll have some questions and answers. I probably start that off, but please do put questions, remarks, provocations in the chat. We'll try to pick those up as we go along and see whether we can pick out some issues which people are really keen to talk about. So, having said all that, Holly, would you like to start us off with your presentation?
Great, thanks very much, David. Yeah, so as David said, I've got a report out today, which has been following a few months of research. That included, there's a lot of looking at other people's reports, and they are referenced in there. So I know this is a very busy topic a lot of people are talking about. And also talking to people who are working within the either in agriculture or in the broader system. It's quite broad because I'm trying to cover a lot with it, and so yeah, to get more detail, I've referenced where to find it. But I started off taking an approach which is very much on how do we make sure that there's why would people invest? Why would the private sector invest? How do we increase those incentives? But I'm also looking a bit at how to make the whole system have better integrity and monitoring, etc. And so the next slide, please. So first of all, we've got to start with a couple of definitions. Sustainable agriculture as a definition, everyone's got their own definition, and there's plenty of disagreements within and outside of agricultural community, but for the purpose of this, we're taking a very broad and outcomes-based approach. So how the systems of agriculture used or specific practices, those that contribute to more biodiverse landscapes, soil health and fertility, reducing greenhouse gas emissions, improving animal welfare and decreasing dependency on external inputs, and of course a more circular system. Systems like organic or regenerative, agroecological, these would all be considered sustainable agriculture, but we're not putting, for the purpose of this, we're not saying that only those that are signed up to a specific definition would be considered sustainable, because farmers may be practicing a lot of sustainable practices without following a specific named approach. So next slide, please. So in terms of forms of private investment, I've taken, again, a very broad view on this. Probably the one most people will think of is the payment for ecosystem services. And that's used a lot in the public sector as well. So the environmental land management schemes in England, or parts of the sustainable farming scheme in Wales, for example, are payments for environmental outcomes, in that case from the government. But this, in this context, we're looking at it from the private sector. So a classic example might be a water company paying farmers to put in practices that reduce runoff and make their job as a water company easier by having cleaner water at the end in their reservoir. Price premiums is another. So the most sort of common one, again, would be the organic, but other price premiums exist. So in the report, I look at the case study of Wild Farmed, and that's essentially where by meeting certain standards, the farmers can receive more money, and that may feed through the supply chain. Long-term price agreements are another way. Now, this might not be the obvious one, because you might think that's just a normal contract from a farmer, from a retailer or other buyer, but that agreement could be structured in a way with particular incentives that either do or don't support more sustainable practices. Compliance markets are another, and that the example of biodiversity net gain is probably the most sort of well developed, and that's the system in England where developers have an obligation to have 10% additional biodiversity in order to get planning consent. And if that biodiversity cannot be delivered on site, it can be delivered elsewhere, and that's where farmers or other managing land may be able to deliver those and receive payment for doing so. The voluntary credit market would be things like carbon offsets. Again, that's probably something a lot of people think about now, and when they think of private finance. In my report, I've paid less attention to the last four on the list, but I think it's important to acknowledge them. Leases, for example, can be structured in a way that supports farmers to be more sustainable, particularly when they're longer term leases, and they can have certain conditions attached in return for a better deal for the farmer when they're a tenant farmer. And there's lots of examples, particularly with organisations like the National Trust, where they are doing sustainable leases. Green bonds and loans, so financial institutions supporting giving better deals in return for sustainability. Community shares is one people may not have thought of, but is a way in which farms can raise finance from individual members of the community, and often in a way that gives local people a stake. They often, although they're not inherently connected to sustainability, they very often are, and that's a good way for people to buy in. And finally, transition insurance is something that less common in the UK, but this would be a situation where farmers will get cover for the purpose of changing their practices, on the understanding that that in the period of the change that may lead to a loss, and they may need to get more support with this. Next slide, please. So in terms of looking at the process, the ways in which we can increase investment. I've looked at, firstly, how we can look at that from the food supply chain perspective, with retailers and other large companies contributing to the contributing more to sustainability. There's also ways of looking at demand from other sectors, the need to support farmers being able to access this and collaborate, and improving things like monitoring, data and verification. Next slide, please. So policies to grow via the food supply chain. So a couple of, so I looked at various things. That there is already a way in which the agricultural supply chain is regulated to some extent, not to a huge amount, but there are adjudicators that ensure fairness in the supply chain. And what I'm suggesting is that the scope of these adjudicators could be expanded to look at whether or not sustainability considerations could come into it. So does the way a contract is structured incentivize or disincentivize sustainability? So for example, if the farmer cannot rely on being able to supply their products for a long period of time, or the buyer may pull out at the last minute or reduce the price, that's a very insecure situation, and it's not a good position to be in to improve your sustainability. Another area I've looked at is the scope for reporting. So when I was looking at case studies, often the food companies were supporting farmers where it improved their scope 3 emissions. So these are the carbon emissions in their supply chain rather than the carbon emissions that they as a company produce themselves. So if we strengthened the regulations around who has to report and what, could that make increase the incentive on supermarkets and others to support farmers? And also there is also obligations, again to a limited extent, on large companies to produce transition plans that are aligned with the Paris Agreement. Could we expand that to make sure that all large food companies are, as again, part of that, their ability to meet those requirements would mean support their supply chain improving. Next, please. Now, there's a lot of voluntary standards out there for supermarkets and others, and WWF in particular have been doing some work on this. The reviews seem mixed in terms of some supermarkets do very well at both reporting and making changes, but others not so well. So I think it would be good if government did a review of how they're working and whether there is a need for something more binding and obligatory outside of voluntary. Next, please. So biodiversity net gain, as I mentioned it before, unfortunately it's actually being weakened at the moment. So recently government announced that they would be removing the requirement on smaller sites. There is also currently an exemption for developments that sort of self-certify as not having a high impact. I think if they're going to, if they've also got an area-based exemption, then they should get rid of the de minimis exemption. Otherwise, there'll be very few sites that are left that are funding biodiversity net gain. Another issue that was found was there's actually not enough expertise in local authorities amongst ecologists to make sure that they actually happen. So that needs to be funded properly. And finally, looking at the model of biodiversity net gain, and could this be applied in other sectors outside of just related to planning consent? And this was I should credit Green Alliance with proposing along these lines. I realise I'm nearly out of time, so I will just jump through the next slides quickly, please. So lots of ways we need to improve data and standards to make the system more robust, in particular with offsets. there's a whole load out there. There are some that are quite well regulated, like the Woodland Carbon Code and Peatland Code, but there's also a whole array that have relatively little oversight. So in order to improve the robustness, I'm proposing these should be regulated and available in public register. So you know if there's a piece of land that has an offset on it, you can't then cut down trees and build a house on it, for example. Improving farmers' access to data and collaborating on setting good standards for things like carbon calculators. Next slide, please. And finally, one of the advantages of devolution in the UK is that we've got all the different governments trying different things and doing well and better and worse than each. So suggesting that they should, they already do this to some extent, but certainly when I was looking at this, Northern Ireland has excellent soil testing approach that the rest could learn from. Wales is good at providing advice and support and supporting farmer collaborations. Scotland's got a great organic scheme, and biodiversity net gain is a good example of a compliance market in England. I think they could all learn from each other in those respects. I'll finish there. Next slide. Thank you.
Thanks very much, Holly. That gets off to a good start. And I think you've drawn our attention to a lot of different ways in which the private finance potential could be realized, including through a lot of regulatory tightening or ways of actually kind of increasing demand. Because there's a lot of discussion usually in the UK, especially in England, on how to fine tune and improve voluntary markets and perhaps less attention to alternative ways of doing it. But I think we're now going to move on to Isabella, who's going to tell us a little bit what you see the options are. Do you have some slides?
I do, yes, there they are. Thanks a lot, David. Thanks, Holly. And a few things that you will recognize that also pop up here. But this report that we published 1 month ago is specifically making the case for improved coordination and alignment in financing the transition to sustainable agriculture. Next slide, please. And so just for context, we had a report coming out last year where we just scoped different instruments in the EU that were use of private financing instruments for sustainable agriculture in the EU. And one of the things that we heard a lot from interviews and stakeholders was that the current fragmentation of this landscape of financing, so the different actors and instruments that are not being coordinated, there's a major challenge for progress. And it wasn't clear though how exactly coordination could or should be strengthened. So some ideas, but it felt like nobody had a very clear idea of this. So that's what I focused on in this follow-up paper now. Covering both public and private finance. Next slide, please. This is still from the first report, but I wanted to have a quick view here of this, the transition barriers for farmers, because I will refer to it later. Especially the first 4 ones here are important for later. So farmers often have limited access to upfront capital for the necessary investments. Second, yields might go down during the transition, so they have temporary risks during the transition. That is unclear if the transition will pay out monetarily, and then they also have to gather specific knowledge about new practices. So these are all different barriers that they face. Next slide, please. And in the last report, we also, I'll just do this very quickly, the way we categorize the different instruments is by their logic, so to say. So, for example, payments for environmental outcomes, but then debt-based financing, and how they address these transition barriers. So, debt-based financing, like green bonds and loans, will address limited access to upfront capital, but price premiums or carbon offset credits will have are incentives that address uncertain monetary benefits or temporary income insecurity. So that's just the logic I wanted to lay out here. Next slide, please. And then with this new report, the question was, okay, why is it so challenging that we have limited coordination in this space at the moment? So why is fragmentation a problem at all? And you can see that different actors have different motivations to support the transition, obviously. So, for example, Holly mentioned it, many corporates focus on their climate goals, scope 3 emissions, and supply resilience, but they might be less interested in biodiversity outcomes. So unless objectives are aligned, unless there is coordination, we will probably have just one-sided outcomes. And then farmers at the moment don't have great access to financing, so to different financing instruments. So there's not enough transparency about what's available, and they have a lot of admin transaction costs if they want to stack different instruments. So all that prevents the uptake of available instruments. And then there's the lack of additionality, so the risk of non-additionality that results from low transparency and low coordination. And financing that is targeted at individual farms will also not be able to address larger ecosystem and water management issues. And finally, it is also much more cost efficient when it comes to implementation, when efforts are coordinated, and is actually more attractive for commercial investors because they also need to minimize transaction costs. Next slide, please. So this is basically the heart of this paper, of this report, is these strategies that I identified based on existing international examples of existing initiatives where financing is coordinated and more aligned, and based on interviews as well. So first of all, we have the combination of complementary instruments. So that the benefits of this is that obviously addresses different transition barriers that farmers have. So it's a more holistic approach. Second, we have the pooling of funds from different sources. So it could even be competitors. But the benefit is that it will actually, for example, when a farmer only gets a monetary benefit from, let's say, carbon credits, it's usually not enough money to cover the costs. So if you pool funds from different sources, it can actually cover the actual cost of transition. Then third, landscape level funding, which just targets a certain area and the farms in a certain area, and is able to address these water management and ecosystem issues or biodiversity issues better. And then there's also an approach where you can stack or bundle different ecosystem services. So that's more on the provision side, so to say. And then fifth, the catalyzing of private funds, for example, through blended finance mechanisms. So if public money is used in a certain way that de-risks private funding, then you can just scale, and then the opportunities to scale overall funding. Next slide, please. So just out of these 5, I picked 3 to give you a few examples. And when it comes to combining complementary financing instruments, I just wanted to explain these 3 different forms that this can take. So, for example, you have these partnerships between agri-food corporates and financial institutions. One example is McCain and Crédit Agricole in France, where the potato suppliers of McCain get attractive loans, transition loans from Crédit Agricole. But McCain is also providing technical support and other support, so that you actually combine different types of support. And then, which is so an example of combining public and private finance is the sequencing of subsidies and private finance. So this is actually an example in the UK, the UK Natural Environment Investment Readiness Fund, where farmers get explicitly support to cover the upfront costs that allow them to participate in ecosystem service markets later. And then lastly, the intermediary organizations that make finance instruments accessible to farmers. So they act like a platform where they gather information, provide farmers with information, but they also do matchmaking between farmers and financial actors. So it's all under one roof, basically. I think I'm almost out of time, so I will probably skip the next two. Maybe we can talk about them later. So landscape level funding and then capitalizing private funds. I think I'll just skip through that. And if you can go to the next slide, please. Yes, exactly. So what we find is that the challenges still for the better coordination and alignment is that you have there are certain elements that are not that are lacking, so they're not offered enough. And for example, transition insurance, Harley mentioned it. There's just not enough of that out there, but it's one of the elements that would be needed, or that can make a difference for farmers to address transition barriers. Then you have antitrust concerns when companies partner with competitors. There are some solutions for that, especially in the EU. There's actually legislation that allows partnering exactly for that reason, for sustainable agriculture. And then you have the problem that at the moment landscape level initiatives are just rarely integrated in CAP strategic plans or in public support plans, even though they allow for it. And also different landscapes, they're just different because you need enough actors that are interested in funding landscape initiatives. It just depends on the landscape where they can find that actually. And lastly, the non-additionality again is an issue. Next slide, please. So recommendations that I derived from this are, first of all, that we do need to improve transparency and drive the harmonization of measurement and reporting and verification standards. And this is done at different levels at the moment. It's driven by multi-stakeholder platform, multi-stakeholder initiatives. It's driven by business associations, because it's a huge issue and would make it much, much easier to coordinate and align different schemes. But I think the public sector needs to be driving this for it to be actually applicable on a large scale. And then the catalytic use of public funds is something that's a big opportunity, I think. So what this can do is strengthen the role of intermediaries that are able to do this coordination, and then can also enable the establishment of new financing mechanisms that use private funds on a larger scale, because you do have these costs at the moment at the beginning where you need to set it up. And then lastly, the embedding of coordination and public support frameworks basically in the new CUP that we will get from 2028 onwards, there are mechanisms in there where it could be where this idea could be integrated, and it should also not just allow for spatial targeting at landscape level, but actually incentivize that. So that would make a huge difference. And next slide, please. I think that's it for me. Thanks a lot.
Thanks very much, Isabella. I think you've helped us sort of see the potential benefits of greater coordination in lots of different planes, whether it's between farms, within territories, between funders, between mechanisms, between public and private, between different types of support, different types of interventions. Um, and clearly that's an important part of perhaps any sort of strategy going forward. But we're now going to turn to Martin Lyons and um, see how your experience has been with different finance and what you sort of would like to see going forward.
Lovely, and thanks very much. And yeah, thanks, Holly and Isabel, for those reports. I enjoy looking into those. It sets out many of the challenges and the opportunities that are out there for private finance. And if we look at the landscape we're currently operating in the UK, we've got England, the devolved nations, England, Wales, Northern Ireland, moving slowly along their public money for public goods, but maintaining an area-based structure to that with conditionality. And then we look at what's happening within England, and we've completely removed the area-based payment structure and moved to a completely public money for public goods, which is kind of setting out a market of what the society wants to pay through government policy and payments. And what I think we really need, that the market really needs, and I think what farmers really need, is transparency of what the public wants to pay for and in which landscapes and for what outcomes, and then where does the private market fit into that and add additionality. I think some of the many challenges for myself as a farmer and many other farmers, if you've already got lots of habitat and nature on your farms and healthy soils, additionality is really hard income stream to get funded for, because you've already got everything what people want to pay you to: hedges, trees, soil, carbon. If you've already been doing good things, how do you get that market opportunity coming down the line? But we're quite often seeing lots of these private markets coming into the space. And I think one of the challenges we face is lack of standardization, lack of framework across the UK, but across Europe. We're a trading nation as a UK with Europe and globally. How do we make sure we drive the same sustainable outcomes through our trade and through supply chain purchasing, not just in England or in the UK, but across Europe and across the wider world? Because without that, we will look, people who want to take shortcuts will always buy from the cheapest source and not care for the impact that their purchasing has on people, place, or planets. And we've got to think about the whole ecosystem. So it's, for me as a farmer in Cambridgeshire, we're trying to link up to our supply chain closer. I'm a commodity grower of wheat, barley, beans, oilseed rape. Traditionally, the Hovis mill, the local mill, may not know where all their wheat comes from. Which farm, which field? How can we get closer relationships? How do we then help them to communicate that to their customers to say, these products are really good because it's driving these positive outcomes on our farms, and it's linking it up. And for me, we often talk about, and I hear lots in press and media, no farmers, no food. Farmers' role is about food production. I think that is the wrong messaging we're kind of putting into the farming industry and the wider ecosystem of society and trade. Food is always important, but farmers deliver so much more than just food production. And for many farmers, it's not food production. It's energy crops, cut flowers, timber, fibre, and other things. So how do we value all of the other stuff, the natural capital stuff on our farms? Water, air, flood management, carbon, everything. So for me, on our own farm, we're working with supply chains to try and inset some of their spending into what I can do on farm. How do I capture data that works for their board and to unlock funding for carbon reductions, but also some all of that water management ecosystems. So funding coming through water companies, supply chain insetting through their carbon bits, what's funding through what lenses, and in that ecosystem, people putting money in pots. And we are seeing some pretty good stuff coming along, but very slowly from government around how does it link up at local level, at a national level, and an international level. But for many farmers, we've gone from a system of paying for produce, getting an area payment, and possibly doing some public funded for some environmental things. Now we have multiple streams of income coming in from different supply chains, additional finance and funding, bank funding, government funding, local council, water companies, supply chains or councils and others in our catchments. And it's really hard for many farmers to understand how do they build a stackable business model, locking all those different fundings in, but also plan it with enough flexibility to plan forward. So B&G has a place. for some, if you want to stick into a longer term contract. Some it's more flexible. For our own farm business, I've looked at all of our natural capital assets and counted them as fixed assets. They're there to stay. Who can fund me to manage them and enhance them? And then we have the flexible assets of infield stuff of through cropping, rotations, carbon, cover crops. Who can fund me to do actions that improve my business? And we often hear the words sustainability and sustainable. I have a bit of trouble with that because sustaining depleted soils and a depleted ecosystem will not deliver food security and a landscape that's healthy and functional for business outcomes in the future. We've got to go beyond just sustainable and measure the outcomes that deliver recovery and future enhancement for water management, soil health, ecosystems, pollinators, and people. We often forget the people in our businesses and in the landscape that deliver this. So how do we link that together? So as a farmer, I'm now trying to link those together, and it's complicated and it's hard. And the policies and the private markets aren't sticking together or gelling together in a timeline that I can stack benefits and business opportunities. So I think that's the challenge we have. But I see many farmers across the UK really up for the challenge and they're seeing the opportunity. But what we've got to do is make sure the private finance comes into the landscape equally across all of the landscape, not just the early adopters and the simple places where private finance can plonk their money and deliver simple outcomes. How do we make sure the farmers are there delivering those outcomes and seeing income sources to drive their businesses forward to have sustainable and regenerative production for the future? And I'll stop there and look forward to the questions.
Thank you very much, Martin. And I think you put your finger on some totally crucial questions. And on your farm, where you're producing essential commodities, which are absolutely core to food security and to the prosperity of farming, it couldn't be a better example of where you need to do, what you've described very eloquently is a sort of the combination of the fixed and the flexible options. I think that's a question a lot of farmers face. And you're reinforcing the message that came from Isabella about coordination, amongst other things. And I think you take your challenge about the word sustainability, which we do use a little bit loosely. So we might want to dig into that a little bit further too. But if we could come next, I hope we get some interesting questions on that. We come next to Jayne Wilkinson, and you're going to, I think, provide us a quite complementary perspective from someone whose whose job is really about the finding finance for the public good element in our landscapes. Anyway, over to you, Jayne.
Thanks, David, and thanks everyone else. Yeah, so I've got a few slides to introduce national park partnerships and what we do, and then a quick example at the end. So yeah, if you could skip to the next slide. So yeah, I'm Jayne. I work for National Parks Partnerships. As it says here, we were established back in 2016, and we're kind of that intermediary part. We build and create sector-leading partnerships between the UK national parks and private finance commercial partners. And it's all about catalysing and amplifying what's a national park plan, so kind of nature, climate ambitions, and driving that forward at scale. But making sure that it works for those particular landscapes and the communities within those landscapes. Next slide, please. And I won't linger on this too much, as I'm sure most people know, but sometimes it's nice to see a pretty map, and it helps to highlight that actually national parks cover quite a large percentage of the UK. I think it's about 10%, and we also work very closely with who are now called National Landscapes, previously Areas of Outstanding Natural Beauty. And so they're 25% of the UK. That works across obviously England, Scotland and Wales with their devolved nations and slightly different policy parts. And I think one of the things that struck me when I started this job was just how different some of those landscapes are, and how some of the makeup and land ownership and kind of traditions within those landscapes really are, and how you can have models that work, but they still need to be adapted to suit the needs of the landscape and the people working within those landscapes. And all of our models that we develop, we kind of aggregation models. We don't own land. National parks generally don't own land, so it's based around how do we aggregate areas together, managed by farmers, landowners, and how do we make that work for them, but also scale it up to meet the corporate demand as well. Next slide, please. So I sit within the nature-based solutions team in National Parks Partnerships. We focus more on the nature market side of it, and as I've touched on a bit about how we develop high integrity models and financing models that work across landscapes for the long term, so usually talking 30 plus years, but how we make them work for farmers, landowners, and bridge that gap between the corporate part and the landowner part. We do a lot of knowledge share type work, both with the national parks, but also we run farmer and landowner events as well to begin to open up the space that is private finance and explain some of the opportunities and some of the potential risks that come with it as well, and things to be aware of. The kind of flip side of our work done by another team in NPP is the more philanthropic CSR type work as well, which I think is also important to touch on in some of these things, because that can often be doesn't have the same scale that we maybe get with some of the nature markets, but it's often quite a good in for starting those conversations with potential corporate partners around what works for them, and it's a little bit less kind of risky on both sides for people to get involved in and help to bridge that out. So we're seeing kind of more and more crossover between the two teams as to how our work comes together. Next slide, please. So that was a very quick introduction to what we do at National Parks Partnerships, and I just thought I'd put in this one quick example of one of the projects that we've been working on. This is based around Windermere within the Lake District National Park, and as I'm sure many people have seen, there's a lot of water quality in the media, in the news, and kind of what can we do about that. So this was a project looking at, can we work with landowners, national park, other stakeholders within that catchment to see if nature-based solutions can help to address some of those water quality issues, but also work for those businesses within that catchment as well. We've kind of done 2 development phases so far, and I think this is another key point in that it's kind of taken us 2 years to get to this stage, and we've not yet delivered anything on the ground. There's a lot that goes into having those conversations, developing financial models that will actually work, again, for both the kind of supply farmer landowner side and also the demand side as well. And that's quite a challenge when you're trying to maintain momentum and buy into projects. So we've done a lot of modelling, we've done bits of monitoring, and we've kind of come out with this proposed model of looking at riparian woodland and wetlands creation, which sort of a bit easier to fit into some of the farm businesses on some slightly more marginal land and kind of build those in. We've done a series of landowner engagement events as to how that might work. But our sort of big challenge with this project is there's no clear route to market in terms of a nature market, water and water quality. There are examples that exist, but as people have touched on already, there's not a kind of standardized route to market. So we're actually looking more at the carbon side of things off the riparian woodland aspects. But that kind of also throws up a lot of challenges as to how do we ensure this is monitored, verified, and it does demonstrate the water quality benefits that go alongside it as well. And it also really means that it's actually quite expensive from a corporate perspective, and it's kind of making sure that that filters down to the on the ground parts as well, and that it all works in a, I'm going to say sustainable, but sustainable in the kind of financial terms of it here for everyone on those parts. So yeah, we're just about at the stage where, as I said before, we've not got any not put any spades in the ground yet, but we're at that stage if we've done all the background baseline work, and we're hoping now that we can kind of move forward into that implementation phase. So I think that was my last slide, and I will end it there, and as with everyone else, look forward to the questions.
Thanks very much, Jayne. And I think you've shown us um, the very important role of intermediary organizations and actually trying to see the opportunities and getting people together. And I think you've pointed to some of the obstacles and which kind of match up to perhaps the messages we've heard from other speakers as well. Um, let's turn to some questions. I'm just going to ask you an immediate question first, Jayne, if I may, which is that you mentioned, the difficulties in a sort of route to market for water management. But one could say, well, we have got in European terms, a rather unusual system of private water companies with various statutory oversights. And have we really done enough to actually oblige those companies to undertake sort of catchment management, which could potentially help the sort of projects you're talking about? It does seem rather odd that we have, a lot of private investment in the countryside through the water industry, but it's difficult to match that up somehow with getting the kind of outcomes we want. I mean, what's your perspective on that?
Yeah, using that last case study as an example, we have spoken to the water company in that area, and they do have through this funding, their funding round, the next 5-year AMP program, they have got catchment funding to do interventions. So we're talking to them about how we can match the two up. I think the big challenge with it is that they work on 5-yearly funding cycles. And so this project that we're trying to develop is a 30-year plus funding cycle. So for them to plan it in and to fit it in that works for, well, the financial model, but also then the landowner that would be receiving those payments for hosting the interventions, there's a disjointedness there as to how their funding cycles work and how we have those conversations to go. And that's on top of the point that you kind of raise about actually valuing the nature-based solutions side of it. And I think there's an added challenge around that with the water part, is that it's not as easily quantifiable as things like carbon yet, and that's proving a little bit of a barrier for some of the nature markets, and for particularly getting people like water companies to put some cash behind it. It's not as guaranteed as some of their other parts, so it's a much more challenging conversation to pull that across. And I think anything that can support those going forward and take that conversation to the next level is more than welcome.
No, thank you. So that does sound like one avenue that we could really try to pursue a little bit more in the next few years, especially as we have, a lot of discussion on the governance of the water industry right now. I'd like then to pick up a question actually from the Q&A, which was for Martin about, and I think the question was about that you'd mentioned it was often difficult to match up the public sector incentives with private initiatives. And I think the question to you is, do you have any examples you could give us of where that's been an issue for you and how you envisage things might be improved and where you'd like that to go, and maybe whether any of that matches up to the kind of thing Isabella was talking about in terms of coordination?
Yeah, I think for some of the examples would be if the government are going to pay for cover crops, companion crops, direct drilling, herbal lays, why would the supply chain also then want to pay for the same outcome to reduce carbon emissions or build soil health up? But when we can break down the asset that we're providing and say, actually, the roots of that cover crop are improving water quality and soil carbon bit, that might be for a water company or the private market to fund those elements. The carbon is part of food security in having healthy soil for production in the future. So, and we can break those elements down. What we have a complete lack of is transparency of what I do receive as a farmer. I want to be very open and transparent that if I'm receiving private finance for my cover crops, I may not then get public finance for the same thing. Or if I'm getting public finance, we've got to be very clear. We don't go chase the private finance. There is limited funding in all this market. and we very limited public funding. So what does the public want to fund now and in the future, and have a clear pipeline of that moving along and taking fund stuff now, but take it away in the future, and then let the private market come in. And we see the same with trees and hedgerows and other features on our farm. Public can fund some of that, private can fund some of that, but who's paying for what? And we're increasingly seeing some of the, if we look at the trees and hedges as 3Ds, particularly our hedges, they're a carbon source. They're a slow the flow and manage the water flow. They're a nature asset. They're full of pollinators and predatory insects. They have multiple functions within our landscape. So let's pick out the assets and market them and see who wants to pay me for the bits. But I need to be transparent of who am I receiving money for? The worst thing I can see that coming down the line, particularly for the nature market, is lack of transparency, and the market gets undermined by poor framework of market, poor business, poor deals that exposes that isn't really good value for money and doesn't drive future investment coming in. And we also need the government to be very clear around within England. The SFI had started and stopped. What is the pipeline so we can invest in the future and have a pipeline of income from public and private? Really makes the private market work then for us, and I can then build that into my business model as I plan 5 and 10 years ahead for my farm business.
No, thank you. I think that makes a lot of sense. And maybe it's not only a question of transparency by the government. I mean, maybe they haven't actually made their minds up about what they want to pay for and what they are, and what they're not, And so if we look at SFI, for example, then we can see that there's not much in there to incentivize farmers to take very strong measures in terms of climate mitigation of the kind. And yet, we know there's going to be a seventh carbon budget coming up, and they're not great distance. And it would be very surprising if there wasn't an obligation on agriculture to reduce emissions during that window. And this is a question all over Europe, and a lot of countries are frankly not grasping the bullets. It's not clear to farmers whether it's something they're going to get a free pass on, and everyone else is going to have to do the emission reduction, or the farmers. So just to give you an example.
If I can just come back on that, I don't think farming as an industry has shown leadership and actually delivered change. As an industry, we're only compliant by 50% to regulation. We have so much more we need to do. But it's not about we can't pay for polluters. We've got to pay for additionality and benefits. And we really need to drive that. And our own farm business has been severely affected by the changing climate in the last 4 years. Extreme wet, extreme heat, extreme dry. Our farm businesses are going to have to grasp the nettle, and we're going to have to find ways of bringing funding in to build that sustainable, healthy soil and healthy system that we have production in the future. And I think farmers are only just waking up to the fact that climate is changing and it's affecting them right at the front and center of what they're trying to do. And the supply chain is also waking up. The security of their produce in the future is undermined by unhealthy soil and unhealthy water systems.
Thank you. Now, there's a couple of questions in the chat about sort of more fundamental issues. I mean, one from Nick Lampkin, and he's saying, well, there are quite a few disadvantages in private finance, and we talked about a few already. And one of which is saying that the private investor is looking for a return. That's an element which is going to add costs in the system. Is that affordable to be able to actually increase the costs of what we might see as public good provision with a private investor added value? And possibly it's not only the investor that needs a return, it might be the intermediaries as well, such as Jayne's organization somewhere along the line, either needing to be paid through the public system or the private system anywhere. The obvious answer to that is, well, yes, if we don't do private finance, are we going to have enough public finance? And when I started working on the CAP, there was 0% of the CAP money was devoted to environmental outcome. Now it's around 35%. That's one of the things we've managed to change. That's nominal rather than necessarily actual environmental benefit. But it's feeling like we've hit a kind of ceiling there, and it feels a little bit like in the UK, the Treasury's appetite for having a big increase in funding is pretty limited too. So that's a question. Maybe I could just get you back to the panelists. I mean, do any of you think, let's start with Holly. I mean, given the drawbacks with the cost of private finance and there's the cost of reporting too, Nick's pointing out. What's your sort of reflection on, well, have we got to make finance work? Or I think, Holly, you were pointing out, well, maybe there's the way we can get the food chain to be taking a larger share in the cost of movement to sustainability, and maybe doing that through regulation.
Yeah, thanks, David. Yeah, I think it's a really good question that Nicholas has raised, and one thing that does actually concern me about all the enthusiasm for private finance is that it shouldn't be used to say, oh, we don't need public funding anymore, or we can reduce the public funding, because there are things that inherently the public funding is going to be better at and more efficient. And I think from a policy perspective, the government does need to ask, is it actually more efficient to put this on the private sector, or is this something where there should be public funding? And I've just one example. So I spoke in my presentation about a situation where you've got a water company that might pay for measures. Well, there's going to be a lot of situation, and that's a situation where you've got a relatively well-resourced organisation that directly benefits. There'll be many situations where everyone benefits a little bit and none of us are well enough resourced, hence why it makes sense to pay for it through taxation rather than private. On the food chain question, and this kind of does relate to the third part, there is, if it's done wrong, there's obviously that cost on the food supplier then works its way through to the customer. So it's sort of still a public tax, it's just paid for at that point buying food. But I think what's important, and why I felt I wanted to highlight the potential for food companies to play a big part in this, is there is uneven distribution within the food supply chain, both in terms of power and finance. So, in the UK, we've got a handful of large retailers that account for about 95% of the amount of food that is sold. So they've got far more power than the average farmer does. And in terms of the margin that everyone in the supply chain makes, the farmer makes a very low margin relative to the retailers. So, and this is sort of, I don't have the answer to this, and this is why I said that I'd like more research into things like the grocery supply chain adjudicator, to see if this question of how you get some of that funding that is in the large retailers, how that can go back to the farmers and support these kinds of measures. And yes, I'm going to say I don't know the answer on that, but I think that's what needs to be researched, and whether that's through standards or contract regulations or a mixture of both. I'm not sure, but I hope that someone will look at that.
Okay, thank you. And I think an sort of important variation of what the kind of government strategy is at the moment. That would be a sort of different departure. Can we just pick up Isabella here and see what you think about this? And I think you perhaps see more potential in private finance than Nick is perhaps suggestion, but perhaps it's starting from quite a low base in quite a few countries. What do you think?
Yeah, so my point on this would be that yes, private actors usually want returns and that as cost, but in this case, I would actually say that there are other incentives for private actors, and you have to look at the different private actors. So, for example, let's take the financial institutions that can offer really attractive loans, transition loans, attractive for farmers. They will not get more return. So they need to be incentivized in other ways. So they could be incentivized for example, by public banks like the EIB, through blended finance mechanisms, through de-risking. So you don't have a high return, but you have a really low risk on these transition loans now, which makes it attractive now for the institutional for the financial institutions. And another thing is, but along the lines of what Holly said, the food companies in the supply chains, I think they do have other incentives as well. So they want, for example, they want a resilient supply chain going forward. So they might be waiting for other competitors to take action, but you can also incentivize them also through, for example, public grants. So I didn't get to present that, but the US Department of Agriculture, they had this really interesting grant program called Climate Smart Commodities Grants Program, and they matched corporate funds with public funds for the big programs, and suddenly like all these food companies came on board. So they have they have other incentives basically to do this. I don't think that high returns will play a big role.
Thanks very much. And Jayne, how about you? How does the whole sort of private finance, the significance of it look to you in national parks?
Yeah, I think I'd kind of expand on a couple of points that actually Isabella and Holly have raised as well, and to say that there's different forms of private finance that work in different situations, and investors obviously require a return, so that then the financial model is a different model, and you've got to get that return back, which is still quite a challenge in many nature markets and with the uncertainty. But I think it's sometimes a clearer opportunity when you're either talking about an off-taker, so people buying a specific ecosystem service, whether that's carbon or water or something. It's a bit more of a direct payment for service model, and it takes out that kind of initial returns part of it. They're buying the service. And similarly, we're hearing a lot more from businesses around risk and resilience, and that opportunity for investing in a nature-based, sorry, investing is probably a bad use of that word there, but financing a nature-based solution. And that's a bit more of a kind of two-way conversation of what is the financial risk to that business from flooding, crop supply, whatever it happens to be, and then kind of what's that direct financial return for the landowner to kind of deliver some of those. And I guess I'd always also highlight that I think the real opportunity in some of these is that they're long-term pieces of funding, and they might not be at high level at this point in time, but it can provide a kind of 30-year period of guaranteed payments once that kind of deal's gone through, and that's still quite an unusual thing, and reflects a bit more of the kind of management and risk of hosting some of these nature-based solutions as part of a farmed landscape. But I think it's still considering that as part of a wider picture of both blended finance and whatever works for that farm business plan. It won't work for everything, and it's still quite challenging, in particular for small scale farmers. It's a bit easier for larger ones to kind of take on some of that risk, and that's hopefully where people like ourselves can help to aggregate some of that and open up opportunities to other landowners and tenant farmers and other people.
So you would see your role, particularly in a way, as helping, yes, the farms which are less well positioned to do it themselves, and there are a lot of quite large estates in England, and with the capacity to employ more specialist people and sort of support. And there are a lot of farmers who are doing absolutely everything themselves, one person, and so it's totally logical for an organization like yours, yes, to try to help those people who haven't got the in-house capacity to do things.
Yeah, and I think while we're still relatively early in the space, and a lot of the finance in terms of scale isn't there, we kind of still need some of those bigger estates and landowners to take on some of that risk, that then opens up the space for other people to come on board as part of that kind of same aggregated model. But it's still quite a challenge sometimes for kind of smaller scale areas to pull that together and actually to make the financial costs stack up for both sides of the equation, for the farmer supplier side, but also the corporate side as well. So that's kind of where our role is a little bit in pooling that together so that you're evening out some of those kind of risk fluctuations that makes it work for hopefully a wider variety of people.
No, thank you. And I'd like to sort of go back to Martin and pick up a theme that you just mentioned, which was the interest in the private sector, in the supply chain, in security of supply, and feeling they have a resilient sources. And we certainly hear this, I think, in most European countries, including the UK, that some of the most active players are interested in trying to reduce the risk of fluctuation in their supply chain. So if they're buying from farms with better water management, better soil management, maybe more cooperative arrangements with their neighbors, maybe with better pest management strategies and so forth, that's kind of adds resilience to the company's business. It's not quite the same as a public goods approach in it, because they're looking for a private benefit alongside a public good. But the two things do overlap. And I'm just going to ask Martin, is that your experience when you've been talking to people about engaging with you and help investing in you or supporting you? Do you find those two things work together, where you've got interests from those people potentially buying your crops alongside those who are looking for more of a public good benefit? And you mentioned the challenges of actually having to integrate those two things and lack of clarity on the government. But is that a dynamic you see continuing? And maybe we need to recognize that it is.
Yeah, I think I work with a number of supply chain companies, either on advisory boards or directly connected into what we produce. I think for some, where you have an annual crop of the same thing coming off the same land, fruit, veg, particularly some of the fruits and that supply chain is buying the same produce from the same supplier from the same place. So investing in their system gives them long-term security, and that's private benefits, not just public goods. These are private benefits that support the business security of securing products. But for some of us, like we're commodity crops, I grow a different crop in the field every year. So I need to link up collectively with everyone in the supply chain that's buying from me to make sure we don't see a good investment and then a bad investment. We want to see continual good investments to drive things forward. But also what we are seeing in some of the climate modelling and some of the tech stuff that's coming along, of using tech solutions for monitoring and measuring, but also layering in the climate impacts. Where we have water now, we may not have in 20 years' time or in 10 years' time. So those corporates are now getting very savvy in where do they need to invest. Do they invest in their supply chain where it is today, or where it may need to be in 10 and 20 years' time? And so this money is being very savvily moved and marketed, and really some of the most progressive supply chains are very focused on the security of their products. And I think more of the supply chain are waking up to the fact of the climate impact and the need to use some of their investment profit and funding to deliver that security of product and relationships with producers. Because if I'm producing some products for a company and they're not got a very good contract with me, and the market doubles because there's a climate impact and everyone's short, do I jump ship and go to the nearest highest seller, or do I have a long-term contract that on the high and the low we have that investment opportunity? But what I have seen in a number of the board conversations with many of these corporates, because of the Trump effect and other things around net zero and climate and other things, those boards are saying, well, we can leave the investment till tomorrow. Let's not do so much. We're seeing their share price, because they've committed investment into these programs, getting pushed back because they're not getting today's benefit. They're not, so we've got to lean in and support these supply chains and companies that are putting that investment in, to say, we want to work with you to demonstrate to your customer and to your board why those investments deliver you better returns, not just today, but in the longer term.
Yeah, and that potentially is going to be accentuated by what we see in terms of fluctuations, which are kind of geopolitical, economic, as well as climate-based, aren't they? So, and that's perhaps something that hasn't played quite a big enough part in the discussion on private finance. So, really, that is what's going to motivate supply chain actors. Isabella, is that what you see as well as at a larger pan-European level? This interest in supply chain security being actually critical.
Yeah, that's what we saw in the last report, that this was one of the main motivations for food companies to engage and to launch different financing schemes. So yeah, resilience of the supply chain. I'm just wondering how, so there was this element of one of our interviews mentioned that if we could somehow get a risk, the risk assessment linked to that into in like corporate investors, or the financial how you say that, well, if they're basically the investors that these agri-food companies rely on, if they would if they had that more in mind, so if that was more integrated in how they gauge the companies, that would have a big impact. So if this risk assessment would be there, and that would have a more immediate impact, because I think that it's, as Martin says, the time element is a big thing here. So has there anyone, because we already had that from one interview, to be fair, but I'm not sure if any one of you has more has research on this a bit more.
Okay. I'm just going to turn to a different sort of question that came up in the chat, but I think it is very much about the additionality issue, which came to Jayne, asking about water quality in the Lake District and saying, well, if the water quality is at risk, which it is, and you've got nutrient overload, is this really a failure of regulation that has brought this about, essentially? And if so, shouldn't we really be addressing that through regulation? It's a pollution issue. Is it reasonable to be looking for more private finance to deal with what you could say is, a breach of the regulatory baseline?
Yeah, I think there's certainly an element of it, and I think when we were working through with it, we are also looking at anyone we work with is making sure that they kind of meet some of those minimum regulations. But I think there was also an acknowledgement that like farmers hold some of the solutions to some of these problems, but they're not necessarily the source of some of those problems either. There are cases where that might be true or is true, but they're kind of nature-based solutions, and it's in the title in some ways. So it was also wanting to make sure that we don't put the blame onto things, but there can be solutions that can be hosted within a catchment landscape that still provide those additional benefits on top of everything else. But I think it is making sure that there is that baseline assessment, for want of a better term, of that land that it's been implemented on, that there's a minimum criteria that's being met for management and future management of that land before any kind of additional nature-based solutions go on top. And I think the other point to add to that is that we're very much looking at this from a kind of holistic perspective, and it was kind of built around water quality, but that those nature-based solutions will also deliver for carbon and natural flood management and biodiversity as well. So it's kind of packaging that all up into one piece. And if delivered in the right places and for the right thing, they can also support a farm business to kind of also operate a little bit more I can't think of the word I want, but often they provide benefits back to the farm business as well in terms of their management. And this is particularly in upland areas, so kind of stock management type things as well, or shelter and shading and all of those. So I don't know if that fully answers the question, a bit of a tangent there maybe. But yeah, it's bearing in mind the wider picture at the start.
Yes, and there may be a slight transparency issue here in the sense that it's not clear always how far farmers are expected in reality to comply with certain forms of environmental regulation which are not enforced very vigorously. And so there may be different understandings of what, what really the expectations are. And they may be in situations where you have in a catchment different farmers pursuing slightly different approaches, and you're not necessarily going to get, a uniform state of play at all. Martin's going to come in here.
Yeah, I'd just love to quickly just come in there. I also think, should we be receiving public and private finance if we're causing harm? Yeah, if we're going to get private finance invested into our landscape, yet we're causing pollution to the other side of our landscape. With I think the private market is going to be increasingly looking at those farmers to meet at least minimum regulation and look at those businesses they're going to invest in. So I think it's a positive thing. We talk to farmers about meeting your own legal requirements and move away from voluntary measures and actually show the data that we are showing those improvements, because then that really drives good ethical investments, private investments into good outcomes.
Does anyone else want to pick up on that? I mean, Holly, do you have any reflections on that?
I think Martin summed that up really well. Yeah, it's another danger that we have. I mentioned the lack of ecologists in local authorities to enforce biodiversity net gain projects and ensure they're actually meeting the requirements. But that's a universal challenge with our environmental regulators, and it's really important that we make that needs additional funding, irrespective of what's going on in the private sector. But I think Martin raises a good point about, should a farmer be getting private or public money for an environmental good in one place when there's pollution or other problems in another?
Yes, and there's an interesting debate in the EU at the moment because under the CAP, the situation is that to qualify for a direct payment, which most commercial farmers get, you are subject to certain forms of conditionality, cross compliance. And the proposition for the Commission for the next CAP is that member states should be able to pay farms for the costs of meeting these cross-compliance GAIAC standards, which would be a kind of quite significant shift in the baseline, whereas in the UK we've tended to do away with that kind of conditionality in England, not so much in other nations where they have been retaining direct payments in a slightly different way. So maybe we've kind of skipped over some of the regulatory discussion in the UK when we perhaps shouldn't have done, and this doesn't necessarily help to clarify the sort of roles and responsibilities and additionality. I think we're sort of getting towards the end, so I was going to just go around and give everyone a chance to say, well, would you, if you'd like to pick on a couple of things you would really like to happen in the next couple of years, either in the UK or the EU or anywhere else for that matter, or in a particular national park, to actually move this debate further, help make things happen. So maybe if we start here with Jayne and give you just a second to think about that, but is there anything that comes to you?
Yeah, first in. I think more clarity or more examples of how some of these opportunities can be layered together as well. I think a lot of them, again, coming from a bit of a nature markets perspective, but they're very kind of singular. And there's then a worry that it almost drives one thing over a kind of multiple objectives approach, or the right thing for the right landscape and the right farm. And I think that's a bit of a blocker sometimes to really making these work. And I think that can also help to unlock more private finance in the right parts of it. And I think a second one, I'm not sure this is like to see, but maybe it's a bit of a recognition of, I also think there's some location-based areas where private finance is easier to bring in, whether that's around urban centres or risk areas. And I think that's great if we can kind of make that work and tick all the right boxes. But I think there's then a recognition of how the public part can maybe fill in some of those gaps where that isn't the same for some of the other areas. There's certain locations where it's easier to do it, and it's making sure that the other areas are also kind of supported to deliver those goods. And I don't know how you go about doing that. That's quite a challenge, but it's not an even space and an even landscape. So it's opening up those opportunities.
Thank you. And Martin.
Yeah, I think for me, it'd be standardizations of measures so we can make a compliant market work across the UK and across Europe. And then we trade those credits and those produces that come from those lands under the same standard. We cannot drive investment and good outcomes and undermine it by cheap substandard products that are causing harm somewhere else. So it's how do we have a trading system that brings in private finance and a measure that we standardize to make sure all trade in the future through private finance and markets for money, but also for the produce we sell.
Thank you. And Isabella?
I'm with Martin here, so the standardization for sure, which is publicly driven, should be publicly driven, and then also very, very clear guidance on additionality. And I would also say really strategic use of catalytic funds where it has the biggest leverage to bring in private funds.
Thank you. And Holly?
Yeah, I would say go back to the point about building on the standards and looking at what needs to change in terms of getting the food companies to see if both in terms of the fairness of the contracts and the way in which they they can incentivize more sustainable measures is looked at in combination with a review of voluntary standards and how they can be improved and whether we need to make those mandatory.
Well, thanks all of you for bringing really nice crisp points at the end there. It's helped us to explore different avenues from a topic which often can seem a bit dry and convoluted, but seems to be pretty important to the future of both the environment and to agriculture. And I think we've helped to kind of see that some of the issues are very similar in the UK to other parts of Europe, as you would indeed expect, and that we have got rather a long way to go in actually getting all this new world to work properly. And it's fantastic that there are people like you and especially farmers, perhaps like Martin, who are actually sort of grappling with it at the ground level, and Jayne helping to make this happen at a national park and territorial level. Do look out, everyone who's interested in reading more of what Isabella and Holly have written on the two websites. And let me thank everyone again, and to Ed at IEP for making the whole event happen and bringing us together. And we'll draw the line there, and I hope we'll find another time and place to talk about all this stuff, and things will have moved on a bit in a year or two's time. Thanks, everyone.
Thank you.
Thanks, everyone.
Bye.